Welcome to the India FinTech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India.
Welcome back to India FinTech Diaries, where we decode the infra, ideas, and people shaping India's fintech ecosystem. I am Hemant.
And I'm Elroy. Today we're tackling a foundational theme, risk, fraud, and data, and why it matters for every fintech, bank, marketplace, and digital platform in India and globally.
Elroy, digital financial adoption is exploding, but so is fraud, obviously. In India alone, cybercrime reporting systems logged about 36 lakh fraud cases in 2024, resulting in total financial loss of 22,845 crore, a whopping 206% surge compared to the previous year. And that may be just the tip of the iceberg. Projections indicate that cybercrime losses in India could exceed rupees 1.2 lakh crore in 2025 if the current trend continues. Fraud is more sophisticated, identities are more complex, and decisions need to be made in real time. To help us unpack this, we are joined by Venkat Srinivasan, Chief Analytics and Risk Officer at Bureau. Welcome to India FinTech Diaries, Venkat.
Thank you so much.
To begin with, Venkat, let's talk a little bit about your background. You have a very storied background working for some of the largest names in banking and fintech across the globe over your career. Tell us a little bit about yourself and what led you to Bureau and what is the mission statement of Bureau?
I started my career when about data science or what was called data analytics and modeling started about in 2000 in India when companies like GE and Amex set up their shop here. American Express, GE, then later on Citibank, all were putting up shops. And it was a great experience for me to learn how to use statistics and econometrics modeling into preventing fraud or occasionally even credit and even marketing problems. So I started my career doing data science work for American Express and then Citibank and so on and so forth for a while. At about 8 or 9 years of experience, I thought I should gain more experience externally. And that's when I moved to UK. And I really think that was a great choice, which I made because the financial crisis had just happened and risk management was taking a new shape in the sense of both from a data and responsible lending perspective. This is where I worked with Lloyds. Then later, a new bank was being created called TSB. So I was a part of that, building that bank. And the startup ecosystem was just building in UK, which is in Monzo and Starling, which started. And I was part of the Monzo startup team. And this gave me an experience of how I could take data science techniques of larger banks into smaller institutions where the cycle is much faster to deploy. And that this really allowed me to create systems. And from then on, I have been with startups. I came back to India, worked with MyShub Loans, then worked with Jitain on Jupiter and launching credit on UPI. And after that, I had taken a little break and then I was always in touch with Bureau. And I liked what the problem statement Bureau was doing. Bureau was saying we need to look at the problem of fraud slightly differently. There are new data points. Are we able to put them together, both in an infrastructure way, both in an algorithmic way, and a product way? And I really thought that I could play a good part in the algorithmic part, in the sense that there's a lot of data which Bureau was collecting. Can we put that together to bring a science, which is the data science, layer to it? And can we now use that to solve fraud problems? And the unique part of what Bureau was trying to do was Bureau was trying to say it's a data algorithmic problem, but we also need to understand fraud had migrated. And the way I often explain is if you had gone 10 or 20 years ago, fraud was like Catch Me If You Can, the famous movie of Leonardo DiCaprio and Tom Hanks, where an individual was doing fraud, which is Frank Abagnale. But fraud has moved away from that sort of a analogy to something like an Ocean's 11, right? 11 people are coming together and they are attacking the system as if it is a group. And so the techniques which we use need to change, and that's where Bureau is operating. I thought this is a unique opportunity for me to build something new, and that's why I joined Bureau.
Understood. Very interesting. And Venkat will double click on what Bureau does. But before that, let's start slightly at a macro level. Over the last few years, we have seen explosive growth in digital finance, but of course, also a sharp rise in fraud, identity abuse, and coordinated attacks. And as you rightly said, fraud is no longer just a random theft, it's organized, coordinated, and increasingly powered by technology. from deep fake scams to sophisticated mule networks. What kind of frauds are you seeing most often nowadays, and how do they differ from the past? And second part of the question, specifically in a market like India, where digital adoption has leapfrogged with UPI, instant onboarding, real-time credit, what are the patterns or new patterns that you're seeing that did not exist 5 to 10 years ago?
I think one important part, which you already pointed out, is that there's a leap bounce in which the technology has moved. What it means is that while the customer side or the product side is improved, people who use it may not be completely aware. So it's easy to scam them. It's easy to take an OTP because I'm just giving an example of OTP.
Right.
And there could be many other ways, especially something like a deep fake. That technology has gone forward. Some people understand it, but most of them will not be. And even a very genuine person could get faked or could get duped by a deep fake photo or a video, etc. Right? So what is happening is technology is moving faster. The fraudsters, we always know that they are more entrepreneurial in some nature. They are likely to use that. It's always about catching up. The question is, how quickly do we catch up, and how do we build infrastructures which can catch up much faster? So that's where bureau really operates. Where I see fraud dramatically changing is that it's far more organized. There would be, for example, a fraud which we saw about 2 months ago. The UPI handle itself had 1, 2, 3, 4, 5, 6, and I'll try to explain what they were. And what it was it was a coordinated ring. There was a ring leader who would actually route the money to the 1, 2, 3, 4, 5, 6, and then it would be routed back to someone else. So it was very, very clear that these 8 people, and the one person was outside the bank, the other 7 was inside the bank, were making sure that you cannot catch all the money is coming to a single person. They're using someone intermediary. I'm assuming that they're giving them 100 rupees or 200 rupees per week or something to give over their account as a mule, or somebody else is operating these accounts, right? So in such a scenario, fraud becomes very difficult to catch because your rules need to be not just looking at volumes, it has to be looking at amounts coming from a particular place, how it's getting coordinated. So that part of the fraud has become fairly complicated. I would stick to the analogy again. It was very difficult to stop the Ocean's 11 team because they had coordinated from everywhere. If you remember the last scene, they walk out of Las Vegas quite cheerfully. That's happening at a granular level and a massive level across the world, not just in India, but across the world.
Venkat, traditionally, financial services companies have handled risk in silos. You normally have one vendor that does KYC, another vendor that does fraud, another one that does AML, another one that looks at transaction monitoring. Now, you at Bureau talk about unified risk decisioning. Why is this shift necessary now, and what breaks when risk systems remain fragmented and siloed?
I think it's a very fundamental question. The old banking was branch based. Some of the documents could be collected at the branch. Many of the transactions would happen in the branch. Suddenly, we have moved into a place where you don't even have to go to the branch at all. But some of these layers, the layers of KYC, the layers of FRM, etc., all of them are built to tackle one individual problem.
Right.
And hence each of them control them. Actually, they do a good job individually, but none of them tie them up. You do not know when you're doing the transaction monitoring how your device is looking at. So a device may be jailbroken. Maybe there is some apps which you don't want it to be if you're a fintech app inside the device. But maybe that is being tackled by one other system which is saying, okay, there are these risks in the device. But the FRM, which is looking at the transaction monitoring part, is not talking to it. And that's a question of how fraud has evolved. We have gone back to each place and tried to solve it. But now is the time to look at all of them together, is to go back and say what matters in the acquisition
Yeah.
matters in the transaction. I'll give you one example. If a particular customer has never come into the branch, you may be able to collect that information that they were acquired to the branch. Their KYC document was given in a particular way. They were a marginal case and they have transacted in a particular way. And this is how the device looks like. Now you suddenly have a larger stream of data, and hence putting them together to get a better profile is a much better way to tackle this problem than individually tackling all these things. And that's exactly where Bureau wants to play a card. Occasionally, we won't replace all the systems. It's not possible to replace some systems because they're embedded, but we can tie them up through our platform. Or if there are 2 or 3 systems missing, we could plug them all together into a holistic model. But the most important thing is to look at risk, not just as a compliance part at the start, but to look at it as a place to understand the customer, keep profiling, and when the profile deviates from what you know as a genuine customer, then you start looking at triggering more friction, looking at reviewing the customer a lot more. And that's exactly how we look at the fraud holistically, rather than saying just point in time solution.
Venkat, when you look at modern fraud today, it's not anymore just about fake documents. You hear terms like synthetic identities, mule networks, device spoofing, and like you mentioned, coordinated behavior. Could you give a layman's example for some of these terms?
I'll try doing that. In India, or even in some other countries, it's
Right.
easier to get a lot of SIM cards. Although in India it's difficult, but people have found a way to get a SIM card. You can get many SIM cards, but you don't want to invest. If you're a fraudster, and I'm looking at a fraudster as an entity which wants to make money, you can't invest in a lot of devices.
Yeah.
So you buy 3 or 4 devices, and sometimes it's 10, depending on the group, and you put them all together. In those 10, you will get 100 SIM cards, and suddenly you have 10 mobile phones, and you have 100 SIM cards. So you can start operating as 100 people. Now, you don't just think, if you're a fraudster, you don't want to think just attacking one institution. You will be able to attack other institutions. And there's a lot of opportunity to use promo abuse. You can abuse the e-commerce side. You can also go after getting lending. You can also become a mule customer. I'm not saying all of them are doing all of it, but identities can be rotated or can be moved from one entity to another entity, because the whole idea is to make the maximum of the investment the fraudster has done, which is the 100 SIM cards and the 10 devices.
Right.
And it's very easy to learn that some of the devices protected, so you need to reset it or you need to spoof it. And that's something which they have learned because they would have seen it getting blocked, right? And they react very, very quickly saying, hey, I attempted after 2 logins, I am not being allowed. So maybe the rule is just 2 logins per device. So there must be a way they're identifying the device. So they will reset it. So basically, very, very quickly, that group of people will be able to identify this, and this gets transferred very quickly through Telegram channels and other sorts of places where information is shared on this. We had seen when we had launched a credit on UPI, there was a lot of interaction, even via the YouTube comments, where people were making it public, saying, "How could I, circumvent a particular rule?" The rule in that case was we were not allowing you to transfer the money to the wallet because we didn't think that was the right use. So we were blocking the wallets. But in the YouTube comments, we did see that somebody had told how smartly they could game the institution and move the money to the wallet. So it is industrialized in some sense. It has become groups, and these groups exchange a lot of information and coordination, and don't stick to just one industry. That means if you can do a promo abuse on an e-commerce site or a Flipkart, or a gig site like a food delivery site like Swiggy, you would also go after a fintech. You could also go after the digital arm of banks. So you'll do all of it because the infrastructure required to do that is the same. So ability to get identities, ability to get the device, SIM cards, and now convert this into a syndicate, which is fairly unknown to the banks, is and the e-commerce site is the best way to operate for the fraudster. And literally, if we keep thinking of the fraudster to be an entity who's looking to optimize their business,
Right.
you'll find various ways to see how that's a smart move by them.
So, Venkat, now let me come to the other side of the equation, right? So, if you have a set of enterprising fraudsters who are looking to maximize their ROI, how can an institution protect against this? Could you explain how this could be done, say, using device level signatures, why these are becoming critical, and what does it actually mean in practice?
One thing which I want to call out, while I'm giving a lot of credit to the fraudsters, even if you think of fraud enterprise, it doesn't want a lot of friction. That
Correct.
means if you stop them midway, they will believe that their time is best used somewhere else, right? So systematic but good ways to go after the fraudsters can actually stop the fraud happening in your institution. So while the fraudsters are a syndicate, they keep experimenting things. It's a cat and mouse thing. It's important for the organizations to think, if they can bring the right friction at the right place, you can actually stop a lot of fraud. And that part is very key. is that if you don't stop some fraud, the signal will go to the market saying that you are quite lackadaisical in your control, and very quickly the fraud exponentially grows. So it's important to send the signal that fraud control matters to you. Otherwise, you will see a snowballing of that fraud. While saying that, I want to now come to the device question which you asked. Is that the device itself has become like an identity for an individual. Of course, it's slightly different if you're using web or if you're using an iOS or Android in terms of how you collect the data. But in general, the device itself holds a lot of information, and it's nearly like an identity. So there are two parts of it: the data you can collect, and the other end is the privacy. So one has to balance the two parts, and I will come to the privacy at the end. But what data is available in a device itself? A device can be used, device or an Android or an iOS can be used to identify the device ID itself. That means it's like the replacement for an IMEI number. You actually can fingerprint the device. And once you fingerprint, if you use multiple SIM cards, I should be able to identify it's the same individual. And the more comprehensive this mechanism of fingerprinting is, more difficult it is for the fraudster to hide it. And this is where we are a specialist. We actually built some of the best fingerprinting, and hence it's very difficult for customers to spoof the fingerprint itself. The second part of it is that device itself has a lot of data. The data can be some like what model it is, what's how much space you have, what kind of camera you have, but equally what kind of things are running there. Is it jailbroken? Is there a VPN? Are you running some app which does not fit into, which is looking to extract more data, or which is trying to replicate some other app? So you can use that information too to build some sort of a risk profile of the individual. Here, of course, you change the variables which you use should differ from an e-commerce to a crypto to a financial institution, but you have a rich data coming from there. The third part, which is really becoming very important now, is about behavioral. What does behavioral biometrics is that everybody uses the app differently, and how you use the app, whether it's the typing speed, whether it is how the mobile moves, whether how you're pressing the screen, all of these are behavioral, and these are behavioral biometrics because they indicate your own behavior. And you can collect this data and start modeling them. While this data collection itself is quite complex, modeling it is even more complex because you're taking all this information and trying to build a sort of a signature of an individual. Going a little technical, if you try to understand whether it's a bot versus non-bot, it's fairly easier to model that using behavioral biometrics. But if you want to build something more complex, you need very strong data collection and also very strong data science behind it. Last but not the least, within this whole device itself, you can actually identify what kind of apps are, and you can use the app to profile the individual. Now, the reason I brought privacy into it is depending on the institution, this some can be allowed and some will not be allowed. But all these information, right from the fingerprinting to what is called apponomics, all this data is available to build first the identity, the risk, and the profile of the customer. And all of them put together can help a client understand who the customer is without actually seeking a lot of data to either step up the friction or step up some sort of an authentication, depending on the risk levels they see. And that's something which Bureau builds on for many institutions.
Venkat, that was super helpful for us to understand the concepts behind all of this. And I promised you that we'll go deeper on Bureau. Now, I think this is the right moment to now start unpacking what Bureau does. So, can you now help us understand how Bureau works? And more importantly, how is it different from the legacy tools that the banks and fintechs have been relying on for so long?
I'll pick up the part which is closer to Bureau's IP, what we've been building over the last 3-4 years.
Yep.
Initially, we also started our journey by trying to identify risk through identity, doing KYC, looking at various identity documents. And very quickly, we realized that it is not just a tick box exercise. Suddenly, we see that identities are being rotated. That means they're being used in multiple places. So how do we go back and say if Venkat's identity was connected to a particular phone number, but after 2 months, that phone number is connected to another PAN, but we see that PAN is sometimes associated with another IP address. So suddenly, it's not easy for us to see the Jamtara kind of network by just looking at an individual record. So we started thinking about if you have to tackle syndicates, there has to be a paradigm shift in the way we structure our data. So we started looking at a solution, and that's where Bureau came up with the idea that we must put them in a graph solution. And I'll take a little bit of time to explain graph. So instead of putting them in a linear way, we started adding this data into a graph framework, and let me call this as a data topology. So what graph really does is it tries to create nodes, and these nodes would be the identity. So a particular phone number and a PAN number can come together, but if the PAN number comes with another phone number, you attach it as another node to it. So suddenly you will create a graph of all the interconnections. For a good customer, the same combination should keep on repeating. That means Venkat with his PAN number and phone number, these are three data points, will always come in the same pattern with maybe slight changes in the name because it may have been spelled differently, or some identity may have my initials and not. But roughly, the structure of a good identity is that the same one repeats over and over again. Sometimes the phone number could change. IP address for sure could change a lot more. But for a fraudster, this combination is going to be a bit strange. That means the same phone number will be connected to multiple PANs, some connected to multiple emails, some connected to multiple DLs. And we've actually seen that. And so you build this whole structure of data, which is the graph data, using these identities. Now, once you build it, what you have done here is already started separating the good customer from the bad customer. What do I mean by it? A Venkat or an Elroy or a Hemant will have a very limited circle of identities because they are not cycling or recycling some identities. But a fraudster is going to have this network quite dense because suddenly you will see the Jamtara in the graph. Now, because you created a structure or a data topology in this way, you suddenly have a way to identify when the identity comes from a network. You're able to say, hey, there is something more risk about it. That means if a Venkat or a Hemant or an Elroy come, you're likely to see them from very small networks because they're using only the same PAN number or a DL, maybe an occasional change of an email address. But when a fraudster comes, it's going to be connected with a whole set of identities. And now you can use that to go back and detect saying, hey, look, there's something wrong with this identity. If it comes with other parameters, you should do more checks or even not allow the customer to come in. So what Bureau has done over the last 2-3 years is to build this data topology. What do I mean by topology? Is to create this way of looking at fraudsters by connecting them through identities. Now we are going a step further with it. This is just identity. We are now building it with transactions. So we are working with banks to say this is not good enough because the customer or the fraudster could come inside the bank and start getting connected to fraudsters by sending money to them. So party and counterparty, they could have set up merchants through which they are doing mule account of fraud work. You start connecting with whom they are transacting. You start seeing more networks from the transaction side. As I explained a little before, you would be able to see that the same customer is transferring money to one, two, three, four, five people, and they are all clubbing them back to another account. Suddenly, using a graph, you can see this network, the flow of the transaction, the data itself or the data topology is itself helping you understand that there is something wrong in the pattern which is developing. Now, you use this to build two types of models. One is models by taking the features, and over a period of time, we are looking to build graph neural networks. That means the graph itself will have neural networks which will predict whether this is likely to become fraud or not. We are in the early stages of building that. So, this is where Bureau brings in a unique way of looking at fraud because we are handling consortium data, we are handling syndicates of fraud. We use graph as our basis to think about fraud and build features. It's not like we don't do the other models, our AI ML model or our device model or rules based model, all of them feed from it. So a lot of our risk techniques are graph native in nature because we are feeding the syndicate nature of fraud, which is how fraud has moved in. So this is one part which I wanted to spend time. I'm happy to take something else too.
Understood. Understood. And Venkat, basis our experience, there are when it is an enterprise solution, there are two, three things which are important. One is, of course, the features and capabilities that the solution brings. But equally important, what we have seen is the ease of integration, the amount of effort required from the organization to get it integrated. So, if you can help us understand how do clients typically integrate with Bureau? What is the onboarding process for a typical fintech or a bank that now starts working with Bureau? Is it API modules? Is it full for platform adoption? How do you draw adoption as well?
I think we do all of it, but you're absolutely right. Data and then fraud can be highly infrastructure heavy. So as bureau, we have the whole solution pack. So there are some solutions which are very simple, API driven. We can give you data for you to model, but we can also build that model for you and produce that on your onboarding journey, which means the latency is very low, and you can actually integrate an onboarding journey even before you've onboarded the journey. We would have given you a risk score, which has some graph native modules within that. Then a little later, the slightly more complex deployments would be something like the device. The reason for that is that you have to deploy an SDK. You in the app, it's in the app itself. That takes a little bit of time. But because we have deployed over a period of time in the last 2.5 years, and very large deployments in large institutions, we are quite good at deploying this. So what we do is that we give you an SDK, you test it very quickly, and in about a day or two, we roll it out to a small percentage of customers in discussion with the client, and we very soon ramp it up. So we have seen that earlier it used to take a slightly longer period, but we have squeezed the time because we have learned what to offer to whom and how we can wrap up from an integration perspective. The last one is actually the graph itself. What we do is the graph, building a graph is quite complex because of the way data is and where you upload it. We've been offering to clients that they can take a small set of data set of a period where they think the fraud exists. We take that data along with them and create a private graph for them. That means it's an instance only for them. They can see it for 2 or 3 months, see what value we are adding to it, and then go back and actually do a full deployment. Because full deployment of a graph does take a little bit of time. It's a lot of engineering, a lot more of data engineering, and then the data science plays a very important role at the end. So that can take about 2 to 3 months. But because the value for that is for them to see, we actually provide them something we call private graph. That means that we take the data, build it in own graph with a separate instance. The data is absolutely protected. They see the layering of the data in that graph system. They can see what value it gives to them, and then they can go for the full hog solution, which is a deeper deployment, which can be both on-prem or it can be on the cloud, on our cloud, both ways. So a whole set of infrastructural deployment, right from being very easy API to more deep on-prem deployment. We do all of it, and over the last 2 3 years, and mostly in the last 18 months, we've become an expert on all of it in some sense because of the client needs.
Two follow-up questions. So what I understand is that means the entire bureau solution can be done on-prem or on the client's private cloud, considering its FS, financial services, right? And second is sometimes when you do a SDK integration, clients are worried about one, the weight of the app increasing significantly, and second is the latency or the lag that comes in when the pages are loading because there's another SDK that gets loaded when the app is loaded. Have you seen any of that happening with your implementation?
Yes, it does. It did happen. This is a constant thing we have to work on. And perhaps the engineering team is not battling with their engineering team. The engineering team is battling with the data science team,
Right.
because
Right.
the data science team would be, let me put it this way, hungry for more data. And I'll explain this with an example and how we are tackling it. For example, in the behavioral world, we need a lot of data. It's like a camera which is switched on in the SDK, seeing the behavior of, say, Hemant is on an app. I want to see Hemant's behavior to the entire 5 minutes, right?
Right.
So that would be dense. This is an engineering problem. I'm telling them, please keep on the behavioral biometrics, which is a temporal data, for five
Right.
minutes. Now, how do we tackle it? We work together with the engineering team and saying, is there a better way to solve this problem? Can we sample it at different points of time? I want Hemant's behavior, but maybe by sampling in a better way, I reduce the cost of it on the SDK, the cost as in the cost of making it heavier or cost on latency. I reduce that dramatically. And we have worked on it for a while now. We also found out what variables are more important so that we don't have to pull the entire set of variables. So, in some sense, my engineering lead does say that there is a mountain and there is a gold. Now we exactly know where to mine. So, we have done this a lot more, and we have actually reduced the app size quite dramatically over the last 1.5 years. But I want to say that this is a constant battle. Right? There will be new variables which the data science would require, and the engineering will have to find a way. And here we work very, very closely to see how we can make sure the size is minimized. because the ultimate goal is to make sure that the customer has no loss of customer, does not lose any customer, either because of fraud or because of customer friction, right? If
Right.
you get it wrong, you're going to lose the best customer. If you don't collect enough data, you're going to be hit with fraud. So the act of balancing that is a science, but also equally an art. And that's where, as we start deploying in multiple institutions, we are working very, very hard. Right now, we are deploying it in one of the largest Indian banks, and it's our constant challenge is the level of number of customers they have, the sort of internet speeds which they would see in rural India. How do
Yeah.
we ensure that we don't add to the latency, but we still control fraud because that's the mandate? So we've been working very hard on it.
And Venkat, all these risk systems do not operate in vacuum. They sit inside whatever the regulatory and privacy frameworks are. Now, how do you think about compliance now, considering Gen AI explainability, user trust, while working with large scale data, plus DBTP is also now on? Now, how do you think about adhering to all that when dealing with large scale data at Bureau? How do you think the fintechs and banks should be preparing for this ever changing world of regulation, privacy?
I think I'll put my hat as a chief risk officer in my earlier jobs and say that if we constantly look at compliance as a thing to be done like a tick box or to be worried about, you don't really solve the problem. The
Right.
best way to look at compliance is to say these are the guardrails given to me because there is some risks which, as one institution cannot see, but a regulator like the RBI can see a larger risk to the environment, to the business system or the ecosystem itself, right? So you look at the whole problem statement as to be internalized. And once you internalize these compliance systems or compliance rules, you start innovating it within those guardrails because it's important for institutions, specifically for fintechs and banks and regulated institutions, because they handle other people's money. So once you do that, it becomes slightly easier. So that's the principal part of it. The second is it's going to change quite dramatically. So one has to keep an eye on what's happening. And the old principle is if you can't explain it, then think very hard why you're deploying it, right? The
Right.
old school rule was can you explain it to grandma, but I don't use it because my grandma is damn smart. But if you can find a method to tell that across the institution, if you can explain why you're doing something, whether it's from a modeling perspective, whether it is from using certain data, if you can defend it within the organization in a very transparent way, and you are able to challenge each other saying why are we taking it, why are we doing this, why not in a different way, you're likely to be within that guardrails and understand how to solve the problem. New data structures are going to come, new data forms are going to come. So this challenge is going to become more and more difficult from now on to going forward, at least for the next few years.
Venkat, Bureau also operates across multiple markets. What lessons from Southeast Asia and other regions that you operate in do you think are especially relevant for India right now? And also, as India becomes more global with cross border real time payments, digital exports, participation in global marketplaces, how does the risk landscape change as compared to a largely domestic system?
If we start seeing money flowing in and out, there
Yeah.
has to be new controls, and I think fintechs will start operating in those places. We'll get license for them. We will see banks are pretty good in handling some of them, but if they start scaling, and if there is a need to lower the friction, and what will happen in banks, I'm assuming, is that banks have used a particular way to do the risk. New players will reduce the friction, so they will start losing the customers, so they need to innovate, right?
Yeah.
Which is what has happened in many other areas of banking and where fintechs have challenged the banks. So when that starts happening, that's really the cusp where the risk and the compliance starts failing, because one is trying to change the techniques which are used in a particular era to a new technique, and a new player who has never played in that era is trying to change the rules of the game. That's exactly the sort of place where fraudsters thrive, because they know that the big banks are going to lower the friction, and they will think that the new ones do not understand the friction or the risk game at all, right? And this is where working closely with the regulator matters a lot. This is where India can play a very important role, because although UPI has grown dramatically, banks have controlled it. Banks have occasionally not controlled it coming together, But individually, banks, whenever they have been faced with large UPI fraud, they have found ways to it. It's still early stages, but we have built slowly. We're building a very robust system across the country, and this is a learning which I feel can go from India to places in Southeast Asia. And this, I'm saying more so when I visit Southeast Asia, I see that the mule fraud is growing there. There's a lot of cross-border, fraud which is happening. Some of the techniques which we are using here could be exported to the other countries too. And also, other countries have expanded their modeling capabilities, their fraud data science capabilities. Those are some things which can be brought into India. And but I do feel that Bureau is in a position to now take some of the learnings which we've done in India to the other countries, specifically in areas of graph and areas of device.
Venkat, looking forward to the next 3 to 5 years, what worries you most about the future of digital risk and fraud prevention, and what makes you the most optimistic?
The place where I do worry a little bit, as a risk person, you should keep on worrying. I think
Correct. That's
that's
part of the job description.
it's the part of the job description. Is that I think we are quite enamored by the whole idea of AI and Gen AI.
Right.
I think a lot of wrappers are coming around, but ultimately, any model works on data, then the infrastructure of the data, which I occasionally use the word data topology, and finally the algorithms, and then the outcome. I do see that some of the AI, as a good friend and a data scientist said, most of the AI today is just UI and there's no real algorithm behind it. We are not thinking very quickly about the fact that to build better algorithms, we need to have better data. We need to have better pipelines to consume that data, and even better topology to consume it. And I'll explain that in the sense that suppose we have to use unstructured data from a credit underwriter, which is credit underwriter would write notes. How do we consume this data? If you consume this data, do we go back and use this data in our data modeling? What do I mean? Underwriter often observes why a customer was allowed to be an underwriter. Has a very sharp view often, because they get about 10, 15 customers to be approved in a day. They have very sharp view. If they are experienced, they can tell the change in the pattern. They can also say why one customer was allowed or what other customers not. These are very good notes which can go back into data modeling, but they are unstructured in nature. So while we all understand it's unstructured, are we creating new pipelines to consume this data so that the modeler who is going to sit and build the model in the data is now accessing that information which is sitting in the credit underwriter's note, right? So this is just one example where you can use Gen AI, but for this you have to make a pipeline. You have to make a pipeline of converting the data that underwriter's notes, which is unstructured, into structured notes, and then convert them into usable pieces of information for the modeler. In the old school, you would just walk up to the underwriter and ask what are the new patterns. They'll explain to you, show some examples. But if we want to use this in a scale, we need to think about how we collect that data, convert that into information, and finally into models. This is a part I don't see enough thinking is happening. I also think that this is going to be enormous for large institutions. So while the wrappers on AI is happening more quickly, I would love to see a lot more infrastructural change so that we are prepared for improved algorithms over the next 1 2 years. That's the first part. The second part where I'm really optimistic is I've been lucky in the last 3 or 4 months. I've been going to some of these meetings and AI or data science meets. I find the younger lot of data scientists are thinking quite hard about solving the problem. They're talking about how data science and data engineering is coming closer. They want to see the outcome of the sort of thought process they are bringing in. And I think for me, that's optimism, because a lot of the ideas are going to come as the data scientists and the data engineers and the product people work together. I do see a lot more of that discussion happening. I'm hoping that those discussions, those ideas start bearing fruit in models, in new techniques, and finally on the outcome, which is really stopping the fraud.
Venkat, this has been a very fascinating and illuminating conversation. Thank you for helping us unpack what really goes on beneath the surface of managing fraud and risk in digital finance. Thanks for joining us on the show.
Thank you. Appreciate it. Thank you so much.
To all our listeners, thanks for tuning in to another episode of India FinTech Diaries. If you enjoyed this conversation, do subscribe and share. We'll be back soon with more insights from the world of India FinTech. Until next time, stay safe and keep building.